Okay, how is this, guys? How's this live stream? Let's see if I can go back to YouTube, see how that live stream is. Okay, let me know how the live stream is. Is this coming in better? I know the camera is not as good here. Okay, so it seems like everything is going better. The camera is not as good here. But at least you can hear my voice. I'm not sure why the camera's not so good. Let me just rub it with a because this is my super expensive MacBook Air, but it's better than nothing. Okay. All right. So the video on this sucks, but at least you're here and we can talk. And so I'm going to let everyone else get a chance to come on in. Let me see if there's anything I can do about the video settings here. Good. Okay, everyone is coming in. This is looking really good. Let me just tell my Discord people it works now. Come into the room. Okay, how in the world can I get my video quality up? Although I don't think all of you care, let's just start. I'm just taking a minute to start because we had like a bunch of people in the room before, and I want to make sure that they get a chance to come into here. So I'm just taking a minute, and I'm just trying to take this minute to figure out. The funny thing is that, like, on my computer, I'm looking at myself, it's like crystal clear, and then on YouTube, it is not. Is the screen clear to you, or is it not as clear? Be honest, okay? I'm not going to muck with it because I know you want me to start. All right, great. So maybe it's just me the way I'm watching the live stream. Let's get started, all right? So September is a very, very busy month in the markets, and there's a lot to talk about, and there's a lot of going on that I think is going to potentially have a big effect on anything that you're trading. May it be forex, stocks, golds, our individual shares. It's going to be a very, very impactful month. In August, we had an extraordinary rally in the US dollar, particularly in dollar yen. It hit, a highest level that we've seen in a very long time. Unfortunately, it was not as good of a month for US stocks. US stocks started to turn lower and is basically starting to raise red flags for a lot of investors. So as we walk into this brand new trading month, the question ahead is, are stocks going to resume their rally like they did on Friday when we had that weaker non-farm payrolls report and the market interpreted weaker jobs as a lower chance of a Federal Reserve rate hike, and therefore, let's buy stocks? Or are they going to look at it as holes starting to form in the US economy? And that narrative is going to affect how the US dollar trades for those of you that are trading US dollar. And basically what I'm getting at is that there are 5 things that I'm watching for the month of September. Number one, we've got 2 central bank rate decisions. Federal Reserve, we have a lot of central bank rate decisions. We have 2 that I want to talk about first. The Federal Reserve and the European Central Bank. These 2 monetary policy announcements are not normal monetary policy announcements. A few times a year, these central banks release their latest economic projections. And when we have the latest economic projections, that's when we get a really good look at where these central banks think the economy is going, and for the Federal Reserve, where they think interest rates are headed through the dot plot. So this is something that the market watches very, very closely. Now, one of the main reason, and everyone's asking, why are yields up so much in the US? Why is the dollar so strong? The main reason is because at Jackson Hole, Fed Chairman Powell basically came out and said that inflation is still very much a problem. So Fed Chair Powell came out and said inflation is still very, very much a problem. And as a result, that led the market to believe that a rate hike could still be on tap, that, we could still get to see another rate hike from the Federal Reserve this year. Now, what's interesting about that view is that even though that may have been the case, Fed fund futures never really showed that effect. Fed fund futures never really showed the chances of a rate hike increasing. So right now, the market is the price action in the dollar suggests that the market still thinks the Fed is going to raise interest rates, and so does US yields. But Fed fund futures is not showing that. And as a result, because they're not showing that, there is scope that we could see a pullback in the US dollar this month. But what I really, really want everyone to be aware of is the fact that we have a lot of issues this month, which is number one, on September 1st, student loan interest payments here in the US have resumed. They started to restart counting student loan interest again. Student loan interest has been frozen since I think the pandemic at 0%. So all the Americans who have student loans no longer need to worry about interest accruing for a couple of years. But September 1st, the 1st of September, the interest started accruing again. And I think in a week or two, they're going to start to need to pay their student loan payments. So this is going to be a pretty big shock for a lot of Americans who, maybe they weren't paying an extra couple $100 a month, but now they may have to start paying their student loan payments again. And that coming at a time when the labor market is starting to show signs of weakness and the economy is starting to show signs of weakness really poses a risk for consumer spending. We had a big boon in consumer spending over the summer. It doesn't really show in the numbers, but consumer spending was firm. And there's a really good chance that we could see the fall be a much tougher time for consumer spending. So that's one problem. The second problem is that auto workers are poised to go on strike September 14th. So that's about 150,000 jobs. 150,000 jobs could, or workers could go on strike on September 14th. You may or may not know that we currently have how could you not know, right? We currently have a writers and actors strike in the US that is costing on the books about, I think 130,000 jobs. But that's not counting all of the ancillary businesses that support Hollywood. Catering businesses, rental businesses, dry cleaning businesses, all of them have said that they're suffering from the strike in Hollywood. So if we've got the strike in Hollywood, we've got the auto worker strike coming on September 14th. And we have student loan payments start to be due. That's three major risks for the US economy. In addition to that, or at least for the dollar and for US assets, the current fiscal year government budget ends on September 30th. And so we could be back talking about a debt ceiling, about, a partial government shutdown if temporary measures are not passed by Congress before the new budget year begins on October 1st. So we've got, the auto worker strike, the student loan payments, the government budget ending September 30th. We have the Federal Reserve monetary policy announcement. We have the ECB monetary policy announcement. Those are all only things that are posing a risk in September. In addition to that, looming above all else is number one, the commercial bank, the commercial bank, I don't want to call it crisis, the commercial bank weakness that was a big problem earlier in the month. Remember how Fitch and some rating agencies downgraded U.S. banks? Well, this could come back as a problem to haunt us in either August or in September, because a lot of banks in the U.S. own commercial or have lent out commercial property loans, and that is becoming a very serious problem. We've seen how it's become a very serious problem in China, and it's also become a very serious problem in the US that could come back to haunt us in September. If not in September, certainly in October. On top of that, we have China. And China, the economy is obviously slowing, and the Chinese central bank and the Chinese government is not doing enough in terms of stimulus to support the economy. Most measures they've been taking right now are directed at what's wrong, USA Forever. Tell me what's wrong with the it seems to everyone else that the video and the audio is fine. I would love to hear what's wrong. Tell me, I'll look into it later. China is focusing its stimulus efforts on the property market, but think about it. Where it really hurts is the consumers and not the property market. And so by giving Chinese consumers or home buyers a better reason to buy property at more favorable interest rates is not the solution to the economy, the problems that they're having in the economy right now. And what everyone is talking about is the reason why China is under delivering in terms of stimulus is because the reason why they're under delivering in terms of stimulus is because President Xi does not want to have the idea of the Xi put out there. What is the Xi put? The Xi put is basically that the government would come out and bail out the economy for whatever it takes. But come on, that's really their job, right? To bail out the economy with whatever it takes. But it seems like he's really resistant to that. And he wants the market to stop thinking that there is a Xi put. And that's why, there's maybe reluctance to really come out guns blazing in terms of supporting the economy. There's only so long they could really drag this out for, right? Because at some point, they're going to have to come in and support the economy some more. But right now, they are not. So let's recap. In September, what are we worried about? First of all, we've got the Federal Reserve and the European Central Bank both have monetary policy meetings where they're going to deliver their economic projections and their dot plot for the Fed, which means it's more market moving than usual. So that's one. Two, we've got the student loan interest payments due. Interest is already started to be calculated again. Payments are due again, so that's going to hurt consumer spending. Three, we have the auto workers strike, which could cost 150,000 jobs, and that strike is set for September 14th if no agreement is made. Four, we have the risk of a temporary government shutdown if a new budget is not approved at the end of September, because the current fiscal year ends September 30th. And then we also have the commercial banks that we're worried about in the U.S. and how commercial banking losses are adding up, and that could become a much more serious problem. And we also have the slowdown in the Chinese economy becoming more dramatic because we clearly, there've been reports that they're hiding their numbers. The slowdown in the Chinese economy could become more dramatic in September as well. And then on top of all this, these five things, There's also, you've got to be watching Ukraine. It seems like a lot of NATO nations are sending a lot of, very heavy artillery out there, and there's fear that the Ukraine-Russia conflict could escalate in September, October. So that is why September is back to school, back to trading, back to markets, back to reality. I think that there's a lot to be worried about in the month of September that could turn the sell-off in the stock market into a more significant correction, either in September or October. October tends to be a very ugly month for the financial markets. So it could very well cause a more significant correction in the markets. And it also, poses a risk for the US dollar. The impact on the US dollar is kind of interesting, right? Because on the one hand, the US dollar is a safe haven. On the other hand, a lot of these problems could stem from the US, making it less attractive. So it really is a matter of how quickly these problems appear and how much it spreads around the rest of the world. So back to school, back to trading, back to reality. There could be a lot of things to be worried about in the month of September that we are watching very closely. But with that said, typically on Mondays with our members, we just talk about the big themes in the markets, and then we drill down to what to anticipate for the coming week. So today is a holiday in the US, and I'm so happy to be joining you all and have some quiet time to talk about the markets. So, but what it means is that we have a shortened trading week. We only have trading Tuesday to Friday. But just because we have trading Tuesday and Friday does not mean that it's a week, that it's a quiet trading week. Traders are back on their desk on Tuesday. We've got 2 central bank rate decisions, the Reserve Bank of Australia, the Bank of Canada. We have the Fed's Beige Book report that's going to come out. We have ISM services that's going to come out from the US. We also have Chinese data. We have CAD labor market numbers. So we have a lot going on this week. And that is why I want to go through with you my heat map, which is what I typically do on Mondays. And what we're going to try to do right now is I'm going to try to share with you my computer screen. And if it goes bust, we're just going to keep talking. But let's see if I can make this happen, all right, without destroying everything. Okay, so hold on. I've got multiple screens that are being hidden right now. All right, so I'm going to click the share screen. What do I want to share? No, I don't want to share the live stream. All right, it is not letting me share my computer. I have no idea how to do this, and I don't want to. Let me hit the share again. Share, no. So I'm going to share with you the link for my heat map, and then we'll talk about it, okay? So here we go. I want you to click on this. I made it public today. I think it really doesn't let me share screen, right? Hold on. I don't have access to this feature. Edit. All right, whatever. Just go to the link, okay? So you've got the link. Let me know when a couple of you have clicked on the link. Say yes, link. I made it public so you guys could take a look at it. Okay, no one is talking to me. Okay, great. All right, so we're looking at the link, all right? So this is my fundamental heat map. I've made it public. I want to talk you through what to expect for this coming week for each of these major currencies. Great. So for those of you that are coming in late, in the chat is a link for my heat map. Find it, click on it. That's what we're all looking at right now because I have no idea how to share my screen. And, I am not about to screw up the only time that I have gotten the stream to go up. Okay, so we're looking at the US dollar. Let's talk about the US dollar. So as I said, August was a fantastic month for the US dollar. And it was a fantastic month for the US dollar. The US dollar traded sharply higher. And even though we had a series of weaker economic data from non-farm payrolls to the inflation report, the US dollar has been on a tear. But we're starting to see some weakness, particularly not so much against the Japanese yen, but certainly against the dollar's a little lower today against the euro, against sterling, against the Swiss franc, against the Australian dollar. We're starting to see some weakness in the US dollar. And, the main reason, obviously, why the US dollar has been so strong, maybe not obviously, but if you watch my other videos, you will know the main reason why the US dollar has been so strong is really US yields. US yields have been on a tear. And, the US economy is also not doing as poorly as people have feared. So right now you're seeing on the heat map that I have a neutral outlook for the US dollar. The reason why I have a neutral outlook for the US dollar this week is because the data from the US hasn't been great. And the dollar, in my opinion, is due for a correction. I think that you're just going to see a buildup of, softer economic reports. And and the case is there for the Federal Reserve to leave interest rates unchanged when they meet this month. So there are two events that we're watching for the US dollar this week. Number one is going to be and they actually both come up on Wednesday. Number one is going to be ISM services. As you may know, the US economy is a service-based economy, not a manufacturing-based economy. So the manufacturing ISM number was better than expected. Non-farm payrolls was kind of mixed. Headline numbers was good, but job wages were weaker, and the unemployment rate was much stronger, much higher than anticipated. The market is currently looking for service sector activity to slow. So the market is currently looking for service sector activity to slow, and that is a problem. And if we get service sector activity slowing, that could be the straw that breaks the camel's back, because I would be really, really surprised if we actually don't see the Beige Book showing a bunch of districts, reporting that they're seeing weakness in the economy. And so if we get the Beige Books showing, a bunch of districts showing weakness in the economy and service sector ISM coming in weaker, which I actually think is going to be the case, then I think there's a very, very good possibility that we should be able to see the US dollar pull back the US dollar pull back against the major currencies. I also believe that the market is traders are going to start to wake up to Fed fund futures are showing us, which is that the U.S. economy is slowing and that the dollar should be trading lower. Now, in terms of the euro, what you can see with the euro is that I'm bearish euros. We've had a string of weaker euro economic reports from the PMIs to the IFO to the ZOO. They were mixed, but mostly weaker. The ECB is not going to be raising interest rates. The market's pricing in only a 20% chance of a rate hike from the ECB this month. So I think they're, for the most part, going to leave interest rates unchanged. We don't have too much in the way of market moving data from the Eurozone this week. Looking at the calendar, the primary numbers, we've got a bunch of revisions to Eurozone PMIs. The link, I'm going to link it again, Kevin, hold on. We've got a bunch of revisions to Eurozone PMIs, but the main number to watch is going to be the German industrial production number, because manufacturing activity is really the key to everything. And with the German industrial production number, if that comes in weaker, and I think that it's going to come in weaker, what you're probably going to end up seeing is that you're going to see the euro, start to falter as a result. And I think, so I'm bearish euros, I'm neutral, bearish US dollars. And then you can also see here that I'm bullish pounds, which is kind of a different view from the other currencies. And the reason why I'm bullish pounds is because the Bank of England is the can I upload it to Twitter? You can watch the recording later, and I'll do a screenshot somewhere. Actually, I can do a screenshot onto Twitter. Hold on. Just give me 1 second. I'm gonna put it into Twitter. I already have a screenshot. So anyway, the reason why I am bullish, why I'm bullish sterling is the Bank of England this month, in my opinion, is going to be the only major central bank that is going to be raising interest rates. Previously, the market was looking for a 50 basis point rate hike from the 50 basis point rate hike from the Bank of England. Now they've notched down those expectations to only 25 basis points, but still the market is looking for a rate hike from the Bank of England. So that is why, if you look at the link that is in the chat, that is why I am bullish the British pound. And actually, if you click on the cards, you will see more detail on the reasons why. Then I am neutral. We don't have much in the way of UK data at all this week. Then I am neutral Australian dollars. The reason why I am neutral Australian dollars is because we've got the Reserve Bank of Australia meeting this week, right? And what's interesting is the past couple of months, the RBA monetary policy statement have actually been less dovish than we anticipated. They've still been talking about maybe keeping the door open for rate hike, but I don't think they're going to raise interest rates at all. Let's put it out there. No rate hike from the RBA, no rate hike from the Bank of Canada this week. And I think the RBA is done. I think they're done because, the PMIs have been terrible. The employment numbers have been terrible. And China's doing terrible. So there's no way that they can justify, in my opinion, a rate hike. So if they sound less hawkish and I think they will, then I think the Aussie should sell off. But it is a rate decision. So because it's a rate decision, we're just going to put neutral, because rate decisions, and the reason why they're neutral, Naomi, is because rate decisions in our books is always best traded reactively and not proactively. And so it's best to wait to see what happens and then take the trade. The Canadian dollar is a huge week for Canada. We've got CAD IV, we've got CAD jobs, we've got CAD trade, we've got Bank of Canada rate decision. This one, there's no way they're raising interest rates, but this one's interesting because last time it was perceived as more of a pause than an end. And the market is still potentially looking for a rate hike to resume in Canada. Oil prices have been high. They're not doing as poorly as some of the other countries around the world. But in my opinion, and previously the labor market has been strong. In my opinion, I think the Bank of Canada is at the end of their rate hike. So the question for the BOC this week is whether they admit that or not. If they indicate that they're pretty much done, that is going to be bearish for CAD. And we've got a lot of data to focus on to see whether that is the case or not. But if they are, if we get, the IVPMI number has, fallen quite a bit. If we get, weaker number, that would obviously be very bad. And I think it will be weaker. And if we get weaker jobs number, which, I think it could as well, that could really hurt the CAD. Now, oftentimes the best trade is CAD crosses, like CAD YED. Could be really good if we're bearish dollar YED and bearish CAD, or CAD Swiss, or Euro CAD. Boris will be the first one to tell you that I love trading commodity crosses. And so cat crosses, something I really like to trade. So we'll be looking for opportunities to trade that probably more through the crosses because dollar CAD has risen so much. Then we've got the New Zealand dollar. I am bearish the New Zealand dollar. And the reason why I am bearish the New Zealand dollar is because New Zealand data has been terrible. Now, you may or may not know the New Zealand dollar is like kind of like the quintessential risk on, risk off trade. So if we believe that we're basically in a situation where the New Zealand dollar is, stocks could probably see a deeper correction, and China is slowing down, Australia is slowing down, RBA is not going to be so hawkish. Then in that case, we're probably going to see the New Zealand dollar underperform. So I'm still bearish New Zealand dollars. It is down today, and so I'm still bearish the currency today. And then we've got the Japanese yen and Swiss franc. So starting off with Swiss franc, I'm looking for the correction that has yet to come yet, which is why it's so important to have your technical indicators to filter out the trades to make sure that you're picking the ones where the market is finally waking up to either the Swiss franc rallying or the Japanese yen rallying. This is where being a trader first is much more important than being an analyst. So while I believe the yen and the Swiss franc should be trading higher, I've been avoiding selling any dollar yen or any yen crosses because they've been so strong and they've been my zip buy zone, not my zip sell zone. Whereas dollar Swiss, I've been more keen to sell because that one has been weaker. And that is why it's so important, in my opinion, to use a combo of technicals as well as fundamentals. But in general, the yen is obviously oversold. It's deeply oversold. We have seen no signs of Bank of Japan intervention. We previously talked about how maybe they would use this holiday in the US as an opportunity to intervene, but they haven't been in the markets. So, when is the BOJ going to come in and intervene the markets? I have no idea, but the previous line in the sand was right here. The one after that was around the 149, 150 region. Maybe that's what they're waiting for. What's really interesting about the Japanese is that one of the big stories was that they raised they expanded the band of the yield curve control to a wider range, and that was in order to encourage the Japanese to bring money home and start investing in some of local stocks, things like that. Whenever central banks raise interest rates, part of the goal is to bring money home for return, basically. But what all of the numbers show, and the problem that the Bank of Japan, the Japanese government is having, and the reason why dollar yen is so strong is because it hasn't worked. All of the data showed that Japanese continue to be huge buyers of foreign bonds. I mean, why not, right? I mean, here in the US, I'm now being offered 5% APR on my savings and CDs. Why would I keep my money in Japan and earn 1%? I mean, who wants to do that? The Japanese certainly don't. I mean, some of you may be old enough to remember the carry trades and Mrs. Watanabe. And, basically that was a nickname for all the Japanese housewives who would move money from one part of the world in search of the highest yield. And right now, the yield is getting very attractive elsewhere and not in Japan. And so it's working against what the Japanese government is trying to do. And they feel probably like their hands are tied. And maybe, the new BOJ governor understands. And, I have shown some of you in the past, and I will show you again when this happens, that every single case of BOJ intervention has not worked. It's been reversed very quickly. And the price action. And let's say they'll come into the markets, they'll buy or sell the Japanese yen, and it will, move in their direction for half a day, maybe a day if they're lucky, and then it completely reverses itself, which you can argue is just a waste of money on their part, right? The only time BOJ intervention is effective is when it's coordinated with other central banks. And maybe the Fed doesn't like that the dollar is so strong, but they kind of do, because if you think about it, a strong dollar drives down inflationary pressures, which is what they kind of want to happen right now. So their motivation is not there to intervene jointly. So they're not going to want to do it unless, the Japanese have a strong reason to convince them, because right now the strong dollar is doing exactly what they want, which is bring down inflationary pressures. So maybe the new BOJ governor knows it doesn't work, and maybe we've got to wait for some other environment. I don't know what this environment they're waiting for is, but maybe it's more aggressive action by the Chinese. Maybe they're waiting for the Chinese to act first. Regardless, I am not going to be selling dollar yen until dollar yen peaks, until my charts tell me that dollar yen peaks. But fundamentally, though, I'm still bullish yen. I am still bullish Swiss francs, but I will be waiting for my charts to show me otherwise. So traditionally, at this point, many of you are like, I really wish you would do this every single week. I do this every single week with our BK members. And so this is a taste of what we do. We do it every Monday. We're going to be doing it every day with our live streams when we relaunch our website later this week. So typically at the stage, I would go through the economic calendar, but because I can't live stream my screen, I'm going to try to use this TradingView live stream for my charts. Let's see. Is it going to let me live stream? I don't think so. Let's see. Idea stream? No. So how do I share? I can share with you my chart screen. I'm going to try to share with you my chart. Let's see if this will work. Tell me if I share with you this chart. I'm going to click on it myself. All right. So we're going to go really ghetto, and I'm going to share with you each of my chart screens. Although that really doesn't work because I want to be able to move the chart too. Is there a way for me to screen share this in a better way? Let's see. Anyway, you're looking at my dollar yen chart. And what you're looking at here is just a series of moving averages. And you can see, dollar yen is trading really, really strongly. How do I live stream? We'll have to work on that for next time. So anyway, dollar yen obviously at the upper right-hand side of the chart. No surprise here, okay? It's at the upper right-hand side of the chart. It's very strong. Where is resistance in dollar yen? Dollar yen resistance is, first of all, at that high that you see right there, which is 147.37. That's the first level of resistance. But the main level of resistance is going to be at the November 2022 high at 147.50, which is not far from that level, and then up at 150. So if we break above 147.52, that's when we could see a attempt to run up to 150. That is where we could see a more significant move into that section. I guess it's just not going to let me live stream. Publish, stream live. Okay, hold on. What's this? Let me try the stream live thing because I really want to show you my chart. Stream live. Okay, hold on. I'm going to give this a title. Kathy live stream for September 4th. And then stream, public, start now, browser. Create stream. Okay. Hold on. I think this might work. Allow, start stream. Oh, look at that. That's kind of crazy. But then where's my chart? Allow. All right. Share my screen. Dollar yen. Share. Okay. I think it's working. All right. Hold on. How do I share this screen? How do I share this live stream? Copy link. Okay, tell me. I think I got it. Hold on. Tell me this is going to work. Tell me this works. Oh my gosh, we got it to work. I think it's working. Tell me it works. Perfect. Okay, so I'm going to go back to that dollar yen chart. All right. So I think, and let me just put this onto the other screen. And this is, yes, you should look at this with fondness because this is my very first time live streaming anything. All right, so you got our dollar yen chart here. We talked about how this high is the resistance that we've got there, and how this is where the next resistance level is in dollar yen. Let me just reframe this. All right, let me move this to my main screen so I'm not staring at. Okay, just give me one more second to move everything into where it needs to be. All right, perfect. Okay, this is exactly what I want to do. So now we're looking at dollar yen and we're seeing that it's, I should have just done this over TradingView. So resistance is up here, 147.50, and we're looking at the monthly charts. This is where the next level of resistance is. No, that's not. We were looking over here, and we were looking at how this is the next level of resistance in November 2022. Now, in terms of support, where's support in dollar yen? The 20 SMA, has done a pretty good job. You can see here of capping the rallies here and holding the support here. So it will be this low here at 145.35 is going to be the first level of support. And below there, these swing lows are going to be very significant. At 144.44 was support at 144 below that. All right, so now let's go to euro dollar. So euro dollar below all of the major moving averages. So euro dollar is below all of the major moving averages. Resistance is this congestion zone here. I would say about 108.75 is resistance in euro dollar. It's still very much in a downtrend. So support is, are you seeing? Okay, you're seeing only my face Q because I need you to click on that TradingView live stream right above here. So support in the euro dollar is going to be at this congestion zone. So I think first 107 is going to be support, and then resistance up at 108.50, 108.75. Right now, because it's still trading below all of the major moving averages, can someone else see my chart, or is it just, let me know if you can see my chart, or you just see my face. If you can see my chart, say chart yes into the chat. So I'm just going to say chart yes or no chart. Okay, great. So that means you really need to click on this link here. I'm going to copy this link again into this thing. You guys are all so patient for doing this with me because this is my first time. Copy link address. All right, everyone can see the chart here. All right, someone please paste the chart link to the people because I can't paste it right now. If you don't mind, just paste it. Said it just went offline. I mean, I can see myself talking right now. I can see myself talking. No voice. I have no idea what's going on. Okay. So the chart, it's no longer going live? How's that possible? So you just see my face? Okay. All right, I'm gonna stop the stream. We're gonna restart the stream. Okay. Let's see. Maybe it just didn't want to do it anymore. Now that I figured out how to do it. You guys are gonna laugh at me because I'm so busy talking to you that I forgot how I did the live stream. Oh, here, publish, stream live. Continue current stream. Let's see if it's to do that. Continue current stream. All right, and then share my chart. Where's my chart? Okay. Oh yeah, I should definitely use OBS, but I got to figure out how to do that next time. Okay, back to the charts. All right, tell me you can see the chart now. No more chart. I just reload the live stream. Reload your page. No charts? Okay, then this thing is like a total bust right now. It seems like You can see it. Okay, maybe it's just a lag. I think it's just a lag. Okay, great. So perfect. So what were we talking about? We went through euro dollar. We talked about dollar, pound dollar. Now we're looking at pound dollar. So pound dollar. Fundamentally, I was bullish pounds. And technically, we're still below all of the major moving averages. If we climb back above 127, I think you're going to have the fundamental and technical support to start to see a more significant rally in pound dollar. For the time being, if it holds below 127, it's still in a quote unquote downtrend. And could make a move down to 125, but I think it's going to start to move higher. Dollar Swiss, we've had it just trapped at a range between 87.50 and 89. I think it looks like it wants to break to the upside, but right now the resistance is up at 89, the support's at 87.50. If these are the levels to break, if it breaks to the top side, it's going to continue upwards up towards this resistance level here at 90 cents. If it breaks below 87.50, that's when we're going to look for a more substantial move down to 86.50. The Australian dollar, I'm bearish Australian dollars. It's in the downtrend zone. It's below all of the major moving averages. I think it's going to go down to 64 cents. And then Kiwi dollar, fundamentally, we started to talk about how I am bearish Kiwi dollars. And so fundamentally, we are in a scenario, fundamentally, we're in a scenario where I'm bearish Kiwi dollars, and we could see the move down to 59 cents. And then dollar CAD, it's very, very strong. We talked about how I'm bearish Canadian dollars. There's near-term resistance up at 136.40, but I would say that the more significant resistance level is up above 130, is at 138. But the uptrend is still very much intact. If we do get a correction, the correction should just take it about 135, 525 or so. In order for the uptrend to really be negated, we need to see a more substantial move down below 134.50. Some of you wanted to see the zip charts. I'm going to open up the floor to questions real soon. We've been doing this for a while. It's been fun, full of adventure. And in my first adventure of live streaming, I did not really like, how challenging it was. But I thank you for your patience. But you can see euro dollar still in the sell zone. The background is red. It's below the indicator line. Pound dollar still in the sell zone. So that means that I'll be looking for opportunities to sell as long as we're below the indicator line. Dollar yen, no way I'm selling until we drop below the indicator line. Dollar Swiss, we had a buy signal this morning, which today's no real price action, but it's a little bit of a it definitely was a signal in the right direction. There's a little bit of profits there. Aussie dollar, I'm bearish fundamentally, and it's in the sell zone, and Kiwi dollar also in the sell zone. And dollar CAD is obviously in the buy zone here. So now let's open up the floor to some questions. And I'll let you all go on your way. Now, just to remind all of you, and some of you were joining me late, the 5 things that we are worried about for the month of September is basically the student loan payments coming due, the auto workers strike, the U.S. fiscal budget ending on September 30th, commercial banking crisis, Fed meeting, ECB meeting with economic projections and dot plot. What would you suggest as a topic for writing a book? I mean, actually, I'll give you guys a little bit of a spoiler here. I actually signed a contract with a publisher to write a book on funded traders and prop trading, but it seems like it's a really bad time for that right now. And just the success stories of successful people, not knowing how to trade and learning how to trade and becoming traders who can achieve financial freedom through prop trading. But it doesn't sound like a good topic now. All right, questions, fire away. So Euro Swiss, Pound Aussie. I don't trade pound crosses at all because they're extraordinarily volatile. But I don't even know if this live stream's still going. But in terms of the trading view, but if it is, I'm pulling up my Euro Swiss chart. Let's remove. It's obviously in a sell zone. Let's remove the indicator. Go back to my Kathy chart. You can see Euro Swiss very much a sell zone, but forming a base. I would not sell Euro Swiss right now. Pound Aussie. Where's Pound Aussie? Pound Aussie, I'm bearish. Aussie bullish pound. I think that if it goes above 190, I think it's going to trend higher. I think it looks like a potential move for 196.50. If it goes above 196.50, we could see a more significant move upwards. What's up with the new BK website? You know, websites always take much longer to create that I would like, you know. But I'm hoping end of this week, beginning this week, we're going to relaunch the website with new offering. I'm very excited about it. And you know, maybe we'll do a live stream or a live webinar to talk about it. Will oil hit 100? I don't think so. I think that would be pretty disastrous for the global economy, the U.S. economy, if oil hit 100. I'm fundamentally bearish Aussie dollar. Yes. Any other questions? Let's see what other questions there are. Let's see. Shit, where did my thing go? Gold. Yeah, gold. So I hope if the stream is still working, gold is right now, it's rejecting the 200 SMA. These candles are bearish for gold. It looks like it wants to pull back further. And then actually, I was looking at it this morning in my zip chart, and you will see that, sorry, let's just make this clean. It is in the sell zone. So I'm actually bearish gold in the near term. Why is the dollar so resilient? The dollar is so resilient because of U.S. yields. Swiss yen, pound yen. So let's just go back to, and then the daily chart. So Swiss yen is still in the upper right hand side of the chart, but I think it's due for a correction. I think it's due for a correction. But I, you know, would wait. I don't really strong opinion. Pound yen looks bullish in general, though. I think that the yen crosses are due for a correction, and it's just a matter of time before that happens. So for those of you like this, as I said, we do this every single week with our BK members. We will be doing actually every day in the new membership, cheaper new membership level that we're releasing, with access to our indicators, going to be much more affordable. And you know, I'll let you guys all know, and I'll walk you all through it when we relaunch later this week. I just did this for fun because it's a holiday, and it was a good time to kind of experiment with this because I didn't have much to do. But you know, that's pretty much it. I've been talking to you all for a very, very long time, and my kids are going crazy. But I want to thank you all for your patience. I would thank you all for your patience for, you know, all the technical difficulties that we had this morning. It's still not the way I would like to be able to share my screen, everything. You know, I'll have to try to figure that out, you know, over the next week. But thank you all. I hope you enjoyed this, and I wish you all a great day. And I'm glad, you know, some of you had fun. I did too. All right, now we have to figure out how to stop this live stream. Let's see. Honestly, I don't even know. Here we go. I don't even know where all my windows went. Let's see. I think it's over here. Okay. All right. Thank you all for your patience.